Hi guys, welcome to this Money Control live stream. You're watching Opening Bell with me, Nandita Khemka. Well, the setup for the market is looking fairly positive this morning, given the fact that the GIFT Nifty was trading higher by 40 odd points when I last checked, and the global cues are also looking fairly sanguine. You know, if you look at the Asian markets mirroring positive sentiment on Wall Street also clocked in a back-to-back session of gains yesterday. Although stocks like Alphabet saw some bit of weakness post disappointing numbers, but it was a good rally on shares of Nvidia that propelled the Dow higher by over 300 points or thereabouts. Of course, big day when it comes to earnings today. 6 Nifty companies will be reporting numbers. PSU heavyweight SBI, you have ITC, Hero Moto Corp, Trent as well, Britannia and Airtel. So all these numbers to watch out for. It's a busy day on the earnings calendar. And also remember, today is the weekly expiry. So expect some bit of volatility, because yesterday we saw a breather coming in on the headline indices amid volatility, because we did clock in that 23,800 mark on an intraday basis, but we gave up most of the gains and ended below the 23,700 mark as well on the index. But the broader markets, they were holding fine yesterday, and they had reversed the recent string of underperformance that they had in comparison with the headline indices yesterday. So portfolio wise, I'm sure investors would have been a little happy yesterday. But today, what should one expect? It's weekly expiry. Are we going to see a resumption of the up move on the headline indices as well or not? We will touch base with our technical expert and ask him this question. But of course, lots to watch out for. Swiggy also in focus, reported numbers and losses have widened. We'll focus in on that stock as well. But of course, your queries, we can't forget about that. So keep them coming in on our live feed. We'll try and take them up as well. Before we move any further, quickly take a look at the top headlines. Wall Street clocks back-to-back gains. The Dow clocks a 300-point up move led by a 5% rally in shares of Nvidia. S&P 500, Nasdaq as well and higher as bond yields drop, but stocks of Alphabet and AMD slump on disappointing numbers. Asian markets mirror Wall Street moves to start the day on a positive note. The GIFT Nifty is indicating a higher start for the Indian market. Oil prices slip as US crude inventories rise. Brent, in fact, is below that $75 a barrel mark amid worries over US-China trade war impacting economic growth. But gold prices remain near record levels as investors flock to safe haven assets. 6 Nifty companies to report earnings today. The big number to watch out for is SBI. Slippages are expected to rise while asset quality may remain stable. Meanwhile, ITC, there the cigarette volume growth is seen at 3 to 4%, and among other numbers to watch out for, you have the likes of Britannia, Hero Moto Corp, Bharti Airtel and Trent. And a majority of exit polls predict a BJP victory in Delhi as voting for 70 assembly seats draws to a close. One poll is predicting a dead heat. Now, results will be declared on the 8th of February. Well, 6 minutes to go for the markets to open. Whether or not we make a dash at that 23,800 mark today as well or not, we will be watching out for that. But of course, looking at the cues for trade, yesterday we closed flat when it comes to the headline indices. It was a range-bound session marked by volatility, but the mid and small cap indices were fairly upbeat. The small cap index, however, gaining somewhere around 2% or thereabouts. The Nifty Bank Index also, built on the traction that it saw a day before yesterday, came close to 50,500 as well, but settled at 50,340 or thereabouts. Consumption names came under selling pressure once again. It was the third straight day of losses on the FMCG index. In fact, yesterday Asian Paints and Titan both were reacting to numbers. Both were among the top laggards on the index. In fact, the top 5 losers were from the consumption basket on the Nifty: Asian Paints, Nestle, Titan, HUL and Britannia. Oil and gas stocks saw buying. ONGC, that was the top Nifty gainer. Even BPCL, HPCL, IOC were seeing buying action amid an upgrade coming in from Goldman Sachs. And mind you, OMCs will be in focus today as well. Brent has slipped below $75 barrel mark, and that's good news for OMCs. But quickly take a look at the fund flows. We did see foreign buying coming in after 23 sessions day before yesterday. But once again, yesterday we saw FIIs turning net sellers to the tune of 1,682 crore rupees in the cash market. 23 sessions, straight sessions of sell-off from FIIs, but only one session of breather. Was it just a flash in the pan? We'll try and figure out and ask our guests about that. But quickly, let me get on board our technical expert then, Chandan Taparia, Senior Vice President, Head Derivatives and Technical Research of Motilal Oswal, joining in. Chandan, good recovery on the indices, right? Especially post budget, 23,800. That was on the charts yesterday, although we gave up most of the gains. But how is the setup looking like in terms of support levels? Do you think they are placed at higher levels now? And in terms of resistance, would that be above that 24,000 mark?
Good morning, Nandita. Thanks for having me. Really, Nifty has seen a decent run-up of around 1,000 points after forming the short-term bottom at 22,786 marks. It rallied by 1,000 points and base of the market is shifting higher. The immediate support for index will be at 23,600 levels. Until it holds about 23,600, we are expecting the ongoing momentum to extend towards 24,000, 24,200. And finally, we have a positional target of 24,444. So from the bottom of 23,786, we were expecting it to go to 24,444. But for trading point of view, we'll keep the support near 23,600 for target of 24,000 marks. Now, what is the reason behind this recovery? First, an important part is that index has formed a bullish divergence where price made the new low, but mechanical indicator failed to make the new low, which clearly indicates that there was no new pressure or pace of selling was lower at the lower zone. Second, the FI long short ratio has gone to 8 to 9%, and we have noticed 6 to 7 times in the last 3 years that whenever the ratio goes to 8-9%, market and ratios both tends to recover higher. So that was the other reason. Put call ratio is hovering near one level, and mechanical indicator has turned from oversold scenario. So these are the couple of reasons. Apart from that, the index is making lower, higher tops, higher bottom with hold of 50 and 200 EMA are the reason that why we are expecting Nifty to inch on higher side. So overall expecting 24,000, 24,200 from the current zone with some positive to range bound bias in the broader market.
What about the Nifty Bank Index? Seeing good traction. How are you looking at the private banking names like HDFC Bank and ICICI Bank? And of course, the big one today, SBI reporting numbers. PSU banks were also, doing well yesterday. We saw good traction. So, how are you really positioned when it comes to private and PSU names?
Yeah, so 2 weeks back, Bank Nifty formed the double bottom near 27,850 marks. It was finding sustained supply near 49,650 to 50,000 marks, which earlier used to work as a support. So it managed to hold above the same. That's why the buying interest emerged, and we are expecting some short covering as it surpasses falling supply trend line and holding well above 50-day exponential moving average. So now the 50,000 could act as a support until it holds above 50,000. The ongoing momentum could take it towards 51,000 to 51,250 in the Bank Nifty index. Now talking about the private banks, expecting SDFC Bank to extend the move to a 1770. Axis Bank could be the other name where buying interest could emerge after the consolidative move of the last day with support of around 990. Axis Bank can head towards 1040 kind of level. SBI, we are expecting a result, but the good part is that supports are seen. Here we have decisive or we have a trade on the conditional point of view. If it manages to hold above 780, 782, then we can play for a short covering to trigger towards 805, 810.
All right, that's the view then on some of the banking names. But by the way, just about a few seconds to go for the market open. The pre-open at least, it's showing that the Nifty is above that 23,750 mark at the current juncture. So yes, we are poised to, in fact, yes, we are getting the first ticks, and it is a 0.3% kind of a gain on the headline index. 23,770 is where we are at. Broader markets continue their up move from yesterday, and the Nifty Bank also is showing a positive, bias at the current juncture. No big moves, but the Nifty Bank index is above that 50,400 mark. Banking names, of course, will be in focus today, including the likes of SBI reporting numbers. We'll take you through the expectations in just a bit, but I want to see what IT names are doing. Look at the likes of Wipro, Infosys. They are among the top gainers, even HCL Tech for that matter, given the fact that Cognizant has come out with its 2025 guidance. and IT stocks in focus because of that. We'll talk about that in a bit, but let's see what the rest of the market is really doing. In terms of sectors, what's taking the lead at the current juncture is the I think it's the IT pack. Yes, over 1% gain coming in on that index. Most of the sectors are trading in the green, barring the auto pack that's trading with marginal cuts. But yes, IT, as I mentioned, taking the lead. FMCG, that index has been under pressure for the last 3 sessions after that budget day pop. So FMCG has reversed course today, higher by almost 0.5% or thereabouts. So yes, it has snapped out of a 3-day losing streak. But in terms of individual movers, there'll be a lot of result reactions as well. But let's see what the stocks on the Nifty 50 are doing at the current juncture. Bajaj Finance, that's the top Nifty gainer. 1.5% gain coming in there. Wipro, Infosys, these are some of the other names from the IT basket that's doing well. BPCL extending gains. Yesterday there was that Goldman Sachs upgrade, and today crude has fallen below $75, the Brent crude, $75 per barrel mark, and OMC is extending their gains as well. IndusInd Bank is the other one that's doing well. Dr. Reddy's, Hero MotoCorp ahead of numbers, looking fairly buoyant. Tata Motors, that stock also doing well from the auto pack. ICICI Bank, Reliance Industries as well, trading with 0.5% gains or thereabouts. Asian Paints, that was the top Nifty laggard yesterday, has managed to stage a comeback, but it's just about a 0.4% kind of gain on that stock. What's not doing well? Well, Apollo Hospital, that's the top laggard. Trent, numbers come out today. Yesterday it had seen some bit of green, but there are fears of higher competition, that's weighing in, that has been weighing in on the stock as well. Today as well, it has resumed that downward move, and it's down by about 1% or thereabouts. Titan extending its losses, and among the other BFSI names not doing well, Kotak Bank and HDFC Life are among laggards. Even Britannia and Airtel, which report numbers today, are trading in the red. Looking at the open, Chandan, coming to you, what would you do with some of these FMCG names? 3 straight days of decline. We did see a pop on the budget day, but what would you really do with some of these stocks like HUL and Trent, also in particular?
So on budget day, FMCG index really witnessed a decent run up, but the momentum tumbled down from higher levels, especially in last 4 days, and it wiped out the entire recovery. So it seems that consumption has to be in focus, but I think discretionary consumption will be more priority. Looking at the HUL, almost same sort of setup, whatever I notice in Nifty FMCG chart setup. So as of now, 2350 is major support for HUL, getting the mixed bias. Same sort of price behavior in Colgate, Marico. Let me check the price behavior of the Tata Consumer. I think it could be the one name where some buying interest could emerge, because comparatively the selling is not that much high and supports are intact at 1000 marks. Let it correct towards 1000, then one can buy with support of 978 for an upside target towards 1050. So if you want me to pick one name from the consumption, I'll go with the Tata Consumer, with the view that major trend is positive and descent bottom has formed just couple of breaks in the counter.
Okay, that's about the consumption name. Tata Consumer standing out on the charts. Another stock that I want to draw your attention to is Swiggy, reacting to its numbers, down 4.5%. Numbers weren't all that enthusing. On the food delivery end, of course, it has done well, but quick commerce has intense competition, and of course it has seen some bit of EBIT loss widening there. Overall, the losses for Swiggy have widened 800 crore rupees vis-a-vis a loss of 570 crore rupees on a YY basis. Revenues up 31%, but EBITDA loss, as I mentioned, has widened to 725 crore rupees. There are some brokerage notes as well on Swiggy. I will quickly take you through some of them. CLSA has an outperform call. Target price is at 750 or thereabouts. That's almost double of where the stock is at the current juncture. So that's a good target coming in on CLSA. But they've said that quick commerce gross order value has beaten estimates, but contribution margin is where there was some bit of disappointment. Bernstein as well has an outperform call, but the target price here has been cut to 575 rupees from 635 rupees. Of course, quick commerce, they've also said that, that business is in the waiting, given the fact that, there is intense competition here. So, yes, that end of the business would take really some time to, really give some positive results. So, on the charts, Swiggy, where do you see it? It's around that 400 mark. Do you see more weakness as the competition heats up? Vis-a-vis Zomato, how is it looking on the charts?
So I'll prefer Zomato compared to Swiggy. The stock has been making lower top, lower bottom from last 7 weeks, and every week the stock is falling down. The momentum started from 617, and now we are trading below 400 zone. So structure is weak. It wiped out the entire recovery from its IPO level. Now it's quoting at lifetime low zone. Major support is 385, but I believe if that is broken, then further downside could open. So need to wait and watch. If it manages to move beyond 425, 420, then only the stability will be big. Otherwise, there is the chances to again getting to the new lifetime low. Looking at the Zomato, I think support-based buying could emerge here. It looks better compared to Swiggy. Major support are visible at 220. With the support of 220, it can again head towards 245 to 250 marks.
Okay, Zomato, the preferred one between the two, Swiggy and Zomato. But talk about an info edge as well. The stock has seen good, traction since yesterday. It has been doing well. Yesterday, of course, there was a stock split announcement, 1:5, and the stock was clearly reacting to it. Today as well, it is extending those gains. Over the last 1 month, the stock hasn't been doing that well. Do you see a change in the trend on the charts?
So, looking at the Nokri, yes, setup is positive with support of 7900. It can head towards 8450 kind of level. So, looking positive in Swiggy, Nokri.
Okay, Swiggy looking good there. Chandan, before I move on to queries, would like you to share some recommendations for our viewers in the current market scenario.
Yeah, so first trade could be buy on MCX. Major trend is positive view on the capital market theme. So with support of 5950, it can head towards 6350 kind of level. So MCX could be one name. Second will be Laura Slab. Major breakout is visible on the daily and the weekly chart. Now with support of 625, it can go to a 655, 660. So Laura Slab and MCX could be two names from pharma in the capital market theme.
Okay, capital market, yes, that has been a theme. Yesterday after Angel One's January update, it did trigger a rally across the capital market, stocks, be it AMCs, be it AMCs, be it, brokerages, all of these stocks saw very good up move yesterday and today as well. I know you can't comment on Motilal Oswal, but the stock is gaining another 9% after yesterday's good up move. But on that note, let's shift focus to some of the viewer queries that are trickling in this morning. The first one is coming in from Naveen on an Adani Power. He says his average price is 576. He wants to know whether he should average it further or should he hold or sell. What are your thoughts on Adani Power at the current juncture? Stock is fairly, upbeat right now, 0.7% higher. 509 is where it's at, but it has shaved off quite a bit from its 52-week highs.
Yes, the stock has seen a corrective move in last almost 8-9 months, corrected from 900 to almost 450 kind of level. So 50% cut off from higher levels. If I look at weekly price setup, then getting some sense of stability, but again the follow-up is missing. Already he has bought and holding well from last couple of months, so I think he can wait for more time. However, I don't advise to do the averaging as of now because multiple supports are there at 450. But as of now, 450 to 600 could be the probable range to trade the stock setup. If it moves above 600, then only the stability will be weak. Otherwise, whatever the quantity he's holding, he can continue with the same, with the view that some bottom process could be there in the counter, but volatile swings of the counter could continue.
Okay, that's a view. Hope that answers your query. But there's another query that I spotted. It's on GSPL and it's coming in from Puneet Rajiv Saxena. The stock has seen quite a spike from its opening levels. You know, it's trading at 343 or thereabouts, but hasn't done all that well in the last month or so. And even if you look at the 6-month returns, fairly muted. How would you trade into a GSPL at the current juncture? You know, it is quite it's shaved off quite a bit from highs.
Yes, so most of the counters have seen a corrective move in the past 5 to 6 months, in line with the decline in the broader market. This stock also corrected from the top of 470 to now below 350 zone. But on weekly chart setup, some buying interest is visible in the stock. So with support of 350, one can look for a bounce towards 360.
Okay, I want to take up this query on Skipper from Satya CK. He wants to know the entry level and the exit level. Skipper reported numbers yesterday. Just want to see how the stock is really reacting to the numbers. Good 1.5% uptick at the current juncture, but in the last 5 sessions, it has seen very good traction, 10.5% gain. Is this the start of a fresh breakout? Because over the last 1 month, it has given negative returns.
So can't say about the breakout, but yes, the bottom is being formed on the daily and the weekly chart, negating its lower top, lower bottom. So I think he needs to get the entry in between 465 to 470. In that scenario, keep the stop loss at 440. Look for a target of 520.
Another stock that there's a query on is Tube Investments, and Debu K wants your thoughts on this stock. Would you advise a fresh entry here on a Tube Investment? It has seen a fair bit of correction. Just coming off, it's in fact, I think it's very close to its 52-week lows at the current juncture. Would you advise, a buy at the current juncture after the correction? Is the risk reward looking nice here?
Risk reward ratio may be nice, but the structure of the chart has totally changed. On quarterly chart, this is going to be the second consecutive quarter where the stock is falling down. In the monthly chart, it negated the higher top, higher bottom, broken its rising support trend line. So I don't see any relief here. In fact, the stock can go to 2850 to 2800 zone.
Okay, that's the view. Hope that answers your query. Geetu Sandesh wants your thoughts on a K FinTech. Wants to know if it's a good time to sell or should one wait more before making a move.
Yeah, good morning, Geetuji. The stock is from the bottom near 1050 and negating the lower top, lower bottom on the weekly chart, forming a positive price pattern. Risk reward ratio seems unfavorable. So now with support of 1120, one can look for a bounce towards 1350 in the counter.
Okay, look towards a rebound of 1350 or thereabouts on the counter. Couple of more queries to go then. Advait Joshi wants your thoughts on Mass Financial for a long-term perspective. Very quickly, how are you, finding the long-term charts for this one? Should one look at entering at the current juncture?
Yeah, so good morning, Joshi. So looking at the Mass Financial, the mixed cues is there. You have to play the broader range. As of now, the support is at 250, upside at 270.
Okay, upside at 270. Hope that answers your query. Just couple of more then. Scient DLM. Jiffin wants to know your thoughts on how Scient DLM is looking for the long term. Down by 1.5% right now. Last 5 sessions as well. It hasn't seen very good traction. Last 1 month, it has shaved off almost 28% or so. 463 is where it's at. Even this one is trading very close to its lows. How would you navigate this? Do you think it's a good time to look at it or wait for more downside?
I think wait for more downside or can avoid. The structure is weak on monthly, weekly and daily structure. It has been making lower top, lower bottom. I think it can go to 420, 410 marks.
All right, then last query. Raj Nihalini wants to know which one is better for the long term between Tata Elxsi and LTI Mindtree. Your thoughts, Chandan, which one should he go for?
Yeah, so like Tata Elxsi or LTI Mindtree, right? So I think LTI
That's
Mindtree is
correct.
better. Yeah, LTI Mindtree is better. For long term, I believe 5500 could act as a major support to drive the ongoing move towards 6700 to 7200.
All right, that's the view then. I hope that answers your query. With that, Chandan, would like to thank you for taking out time and joining in this morning and sharing your thoughts with us. Always a pleasure. And I look forward to interacting again sometime soon.
Thank you.
Thank you. Thanks a lot. Quickly take a look at the market then. We have slipped into the red. The opening gains have been given up. Nifty below that 23,700 mark. The texture of the market has changed, but no big cuts coming in. But we have given up all of those opening gains. It is expected to be volatile because it's weekly expiry today. But even though the mid cap index has also slipped into the red, the NSE advance decline ratio is tilted towards gainers at the current juncture. Almost 1:1, that's the NSE advance decline ratio. 1184 advances to 1048 declines. And what's really weighing in is some of these consumption names like Titan, ITC continue to see some selling pressure. Even Trent ahead of numbers, and even private banking names like HDFC Bank, Kotak Bank aren't doing well. Even BEL, stocks, defense names that saw some bit of traction have slipped into the red today. So yes, these are some of the stocks that are weighing in on the market. SBI as well reports numbers today and trading in the red ahead of numbers. But let me get on board our next guest for today and understand where we are headed from here and what should one really do with their portfolios after the budget. Aishvarya Dadheech, founder and CIO at Fident Asset Management, joining in. Aishvarya, lovely chatting with you. I think I'm chatting with you after a long time. First and foremost, the recent leg of up move that we have seen in the market, although we are fairly volatile at the current juncture, do you think it has more legs to it now that the budget is out of the way? We have the RBI policy as well tomorrow. So post the policy and after the budget, do you think we will sustain this up move?
Yeah, so obviously we saw, first of all, good morning, and my apologies, good morning to all the viewers. Saw a lot of volatility, especially in Jan, and all this event playing out both in India with budget, and then we saw what happening with the US, Trump and all that. I believe this volatility is here to stay for some more time. We have the tax bill coming today, tomorrow we have an RBI much awaited policy. Day after tomorrow we have Delhi election outcome, which will have an impact on Monday, more or less. So we are in, I would say, turbulent sea, and this volatility is here to stay. Only thing which really makes me more jittery about this is how the currency will play out. What we have seen with the Trump announcement and the on and off of trade war, this volatility will basically make dollars stronger, Nandita. And when that happens, this will have a repercussion impact on emerging market currencies and emerging market equities. So if I were a head on FI who is a global asset allocator, the idea is that at 4.5 or little less than that, with more stability in US dollar, give more comforting position for those investors, and that money can possibly still go throughout for the next 2 to 3 months into the US, impacting all of this emerging market equity as well as currencies. Good thing which has happened, in my view, which can provide some stability to this volatility in the market, is if you look at the result season so far, has not been very disappointing. And second is there is some element of both growth plus our pro-growth budget will provide the much needed impetus. So if you see the GST number recently, if you see our manufacturing PMI with day before yesterday, it's showing some signs of stability coming through. And the consumption-based expected growth because of budget can provide some more stability to the India macros and India earnings season. So I think it's a fight between the resilient domestic India's market, macroeconomic side, versus the upfield which is happening in the global market, all led by Trump and associated things. So let's see who will win over, but that will obviously induce more volatility into the system.
So yes, the volatility is here to stay, and as you rightly pointed out, the dollar has been strengthening, and that has been keeping the FIIs away from our markets, right? There was some bit of buying that came in day before yesterday from FIIs after 23 straight sessions of heavy selling, right? Do you think that was just a flash in the pan, because they are also heavily shorted, right? In our system, they have reduced some of those shorts. Now, I think the long short percentage terms stands at I think somewhere around 18% and 82%. So they are still heavily shorted, on the short side when it comes to the Indian market. Do you expect some of it to be covered? Would you say that the buying that we saw day before yesterday was just a precursor to a FII short covering rally? FII driven short covering rally?
Yeah, I think that data is just an oasis in a desert. I think I'm not reading too much into that positive number after a $10 billion of selling in the month of January itself. What I understand is when I look at India's valuation compared to most of the emerging market, in spite of all the decline, India is still expensive. The only country which is more expensive than India is New Zealand, or possibly US. That is which, like, a couple of names there. So what I understand, the pros and cons of how FIs are looking through, I believe the hot money part of the word, which is more, I would say, temporary in nature, possibly has gone out. But I don't expect too much of selling from here onwards. The quantum which we basically saw in January, whatever will happen is more to do with, as I said, the strengthening of dollars and with the way US provided more better opportunity, especially from the debt perspective, not equity, for all these investors, which possibly see money moving away from that. But if I look at from FI holding perspective, we are at like a decade low. I think we are closing to 16% or so. So there is now very limited room. India's story is still intact. Macroeconomic indicators are still intact. We are possibly though not 8%, 6.5%, but still the fastest growing economy, large macroeconomy in the world. So that turnaround possibly will happen where they will go back to 17.5%. But it might take a couple of months. So there might be a couple of months of more selling unless we have a stability about what Trump will do, how all this trade war will play out. This and possibly at back home, how result season and the earning growth momentum looks like. Till that time, possibly FI selling can continue for at least 2 more or 3 more months before we see some stability there. And that will bring in the volatility as we were discussing last.
Okay, got your point. Of course, there are quite a few moving parts as well. We really don't know how this trade war is going to pan out from an India standpoint. And of course, we will be reacting to that as and when it plays out. But you mentioned, of course, that there has been some improvement in quarterly earnings as well, right? First 2 quarters were washout quarters, third quarter maybe a little better. But what, according to you, have been the hits and misses from whatever we've seen so far? What do you think has turned out to be a winner? Which sector? And which, according to you, has seen, poor earnings and which will take some more quarters to reverse?
So basically, we are still in the process of quarterly. Today is a very heavy day with likes of SBI and ITC reporting numbers and many others. I think 75-80% of the Nifty 50 companies have already reported numbers. And when we saw that in detail, what we trying to bring the point here is the kind of pressure that we witnessed in Q2 has abated in Q3. Right. Obviously, the expectations also went down very low. So if I look at the Nifty 50 companies which have reported numbers so far, we have expected to report a revenue year-on-year growth of 4%, where they reported almost in line to that number. So there is no further deviation from what I would say estimations were on revenue as well as on PAT. I think the PAT growth for these companies was expected to be flattish, 1% or 2% growth year-on-year. And we have reported that number only. So in short, the number with which we are speaking right now, that 5% growth or 6% growth of FY25 still holds. And we don't expect there's any sharp cut in Nifty's FY26 or FY27 EPS post this quarterly result. On top of it, if you look at the sectors which have done well, I believe BFSI has stand apart. IT has supported the result season. Chemical is one sector which has come out of surprise, and many of these companies have reported very decent number. Sector which has basically been impacted more are more close to commodities and oil and gas and metals and all that, which has actually dragged down the earnings. But BFSI is one which has been providing the much needed growth momentum given the expectations to this earning season so far, which has not led to sharp cut in earning thus far. But chemical is something which has really at least got my interest there.
All right, chemical, poised to do well. Of course, it's with intensifying trade war between US and China, India, of course, stands to benefit. The whole China plus one theme that could, of course, play out for chemicals. But the budget gave impetus to consumption over capex this time around. Would you do the same when it comes to building a portfolio? Would you look at consumption names? Because the hopes are that urban consumption slowdown that we have seen will be countered by the tax cuts that were announced in the budget under the new tax regime. But the whole theory that the entire money will flow into consumption, some of the experts are divided on that. Money could also flow into capital market themes, which is why I think we saw a good rally coming in on capital market related stocks yesterday. How would you play consumption in that light? Do you still believe that consumption is valuation wise fairly expensive, because traditionally consumption is expensive, right? So based on this theory that consumption will go up, would you look at consumption, or would you say that not really, they are still expensive?
Yeah, so what I have been hearing around after budget is it's consumption over capex. But how do I say this is I think it's consumption plus capex. So capex is definitely not going out. Obviously, the excitement about that high 20, 30, 40% growth because of the base is looking at 10% on the revised number. Obviously, the big shift which government rightly did was to induce consumer to directly start spending, which will provide us the much needed impetus for growth, which is lacking, especially in the urban side. And we will start seeing this data, especially when this number will start reflecting a couple of quarters, 2 to 3 quarters from here. But when I look at from the consumption as a sector to play, I think there are 2 points I want to bring here. First is, I don't believe that this shift, when we're talking about almost 1 lakh crore of saving, this shift, the saving is primarily 70% of it will accrue to household income, which is between 12 lakh to 50 lakh rupees annum. And in that cases, we are not expecting that the staples will see a disproportionate spending. What we understand here at Fident is that a large part of this saving will possibly find its way either in discretionary spending or possibly in capital market in the form of saving. Eventually, everything will go to banking and deposit growth will move up, but discretionary spending and possibly platform play where the financial agent of saving is the thesis, I believe, can benefit out of it in the coming times. Now, when we come to the discretionary spending, what are the sectors which we believe should do well is possibly retail, or possibly aviation, or I would say hotels, apparels, even highs. I would say two-wheelers, in especially automobile sector. So those are the areas which we possibly are parking our money there, in getting in cognizance of what the valuations. So auto is one, Nandita, which possibly two-wheeler auto is where valuations are comfortable, and which will be a play on consumption going ahead. And second most important thing is, if you look at the last 4 years, value stock played very well, right? We saw a lot of this growth story underperforming and value because of the way government was spending and the whole narrative was changing. And I believe right now with the shift will happen toward more growth and possibly lesser on value. That tactical allocation to asset quality, also in the portfolio, is what I believe is the talk of the time. So that shift should possibly happen over the next couple of quarters.
Okay, so you said it's a consumption plus capex budget. So would you still look at capex related themes like defense, railways, or would you say that despite the correction, valuations are still elevated, because they did see quite a spectacular run, right? And order books may be swelling up, but it has to trickle down to numbers as well, revenues, etc. So would you look at these capex themes as well?
So on the capex theme, what we did one webinar very recently for the annual outlook, and we said this is a year of selection, Nandita. So even in capex, there are certain areas which you have to completely ignore. So we completely ignored railway all of last year. Similarly, we ignored rail also as one of the area which we will not even look at, roads and railway. I believe this year defense is something which possibly still have a lot of cushion left, because I think this is very strategic to the country. And when you look at the operational numbers, the order book and things like that, and the kind of spending which will happen, there is still some juice left in defense stock. When coming to capex story, there are names which we believe can still provide that much needed growth, but one has to be very, very selective. You just can't spray and pray that all the whole thesis will play out this calendar year. So obviously you will have to have a mix of consumption plus capex, but we will not be in that camp who will completely ignore capex as a theme. I believe that is where the alpha will be created going ahead, if you are able to identify some of those high prone growth area in capex, where valuation in the last 1.5 to 2 months have taken a sharp beating.
All right. So it's a mix of capex and consumption. That's how your portfolio should be really constructed. But last question, really, we have the RBI policy tomorrow. We have a new governor. Your expectations, and what would you be watching out for from his commentary, from his very first?
So I think this is going to be the most difficult for the new governor to come, and I think this platform, the stage is very, very intimidating for him, right? Because why I say so is, normally we haven't seen rate cut happening when currency depreciate, right? And at the same time, yesterday, before that, the probability of US cutting, say, 2 rates were very, very low. Now, obviously, we saw yesterday that there was some weak data coming out of US, and we saw the US 10-year went to almost 440, 442, and the expectations of rate cut is inching up. But back home, we possibly have a very strong risk factor of currency depreciating if we see this cut happening on our repo rate. But at the same time, it's like, if you have to see the bean balance, the risk is on the currency side. The requirement for a rate cut is obviously the slowing down of growth. And the way the RBI has infused liquidity last week, we are at, I think, almost 50,000-60,000 LAF window number as of now, compared to 2.5 lakh crore of liquidity deficit before that. And we all understand that transmission doesn't happen until we have liquidity in the system. It indicates that RBI will possibly bite the bullet and cut 25 bips rate cut tomorrow to provide the much needed growth aspect. I just want to bring one data point here, that if you look at one of the emerging markets similar to India is Indonesia, which has cut rate really recently. And we haven't seen much of his currency getting depreciated. Obviously, every macroeconomic is different, just to connect the dots. So possibly the way our inflation data is looking at, and the expected inflation in the coming months keep moderating, we have a very small window to cut rate in Feb to provide the much needed impetus for the slowing down of growth. So inflation is in our favor. It can help us in our growth part, but possibly currency is a worry. So it will be very interesting to watch what happens in RBI policy meet tomorrow. But short, we are expecting 25.
Yeah. Sure, it will be interesting. All eyes are on this policy, trained on the new governor, as to what kind of commentary comes in, what he does. Because most believe that last policy's 50 basis point CRR cut would have set the stage for a rate cut as well. But of course, we'll get to know only tomorrow. But with that, Aishwarya, I would like to thank you for taking out time and joining in and sharing your thoughts with us. Always a pleasure, and I look forward to interacting again in the future as well.
Thank you, Nandita. Thank you so much.
Thank you. But on that note, we have completely given up all of those opening gains. Under that 23,700 mark on the index. Sensex as well, 100-point cut. Even the broader end of the markets, moving down. But the advance decline ratio as of now is in favor of gainers. So 3:2, that's the Nifty NSE advanced decline ratio at the current juncture. But very quickly, I want to take you through what SBI expectations are, because numbers are expected. The stock is not doing all that well ahead of numbers. It is expected to be a good quarter, with the profit likely to surge 64% on a YY basis. Asset quality is likely to be stable, but slippages may see some bit of an increase. Healthy growth is likely in both loans and deposits, and NII, or net interest income, is expected to see a modest 6% rise. Aside of that, you also have ITC that will be reporting numbers. Net profit may slip on the back of high base. Last year, same quarter, there was some bit of tax credit. Because of that, the base is high and the profit figure may be lower. Cigarette volumes, that's the most important thing to watch out for. That is expected anywhere between 3 to 4%, and in terms of revenue, it is likely to report the highest amongst its listed peers. Revenues, in fact, may rise 11.5%, but profit, as I mentioned, could see a degrowth of 8.1% or thereabouts. Aside of that, FMCG cigarette segment, these are expected to do well. Revenue for tobacco segment may see a 7% jump. Agri and paper arms, however, could be a drag. And the other one, Trent, very quickly, want to just say that revenue here is likely to grow in double digits, and profits are also likely to jump on strong footprint additions in West Side as well as Zudio. But remember, the stock has not been doing all that well. Last year, it was the showstopper, so to say, the Nifty showstopper, but this year hasn't had such a fashionable run. And the re-entry of Sheen into the Indian market, that hasn't really gone down well, and we've seen the stock reacting to expectations, or the possibility of higher competition going forward. So yes, all in all, a big day for earnings. Aside of that, you also have Britannia and Bharti Airtel. These are some of the other companies that will be reporting numbers as well. So yes, a busy day on the earnings front, but for now we are completely timed out on this edition of Opening Bell, leaving the market trading lower by 60 points or thereabouts on the Nifty. But let's see how things really pan out, because for now the advanced decline ratio is tilted in favor of gainers. But with that, thanks a lot for tuning in to Opening Bell, but we will be getting you a chat on what to expect from the RBI policy this time around at 11:30 a.m. with Lata Venkatesh. Don't forget to tune in for that, and of course post that we'll also see you on Closing Bell. Have a great trading day and come back and join us later. Thank you.